A lot of people want to know what the forecast is for the 2026 housing market. Now, of course, I don't have a crystal ball, but I could tell you what my opinion is and also what a lot of other experts' opinions are, and then you can form your own. People are asking, are we expecting a crash? Is it going to become easier to either buy or sell? I'll break down a lot of those questions for you here in a second. Over the last few years, affordability has become an issue. We saw prices go up drastically. We saw interest rates go up drastically. We saw insurance rates go up drastically. All these things made your monthly payment more and just the homeownership a little bit less affordable and other homes less affordable. Another thing is sellers have been hesitant to move. It's the rate lock-in effect where homeowners have a very low rate and they don't want to give it up. So it locks them into that home for a long period of time. So a lot of people have been stuck on the sidelines because buyers are hesitant to move forward with buying and sellers don't want to give up that interest rate. So it's kept inventory levels low. And that's part of the reason why from the peak in the market for home sales about 2021 to now, there's about 35% fewer home sales happening than there was just a few years ago. Now, a lot of experts are forecasting 2 to 4% appreciation nationally. Now, if you were to drive into local markets, what we're looking at is probably somewhere between 2 and 10% appreciation in the Charleston Tri-County area. It just depends on what local market you're looking at. And there's a lot of reasons why it can change from one local market to another. If you're interested in hearing more about that, give us a call and I'm happy to break that down a little bit further for you. Now, there are some markets that are actually losing value, and it's the typical markets that do because they also aggressively climb a lot further than the rest of the country, and what goes up must come down. So some of those markets are like sub-markets in Florida, Texas, Nevada, and it's not everywhere, but it's a lot of little sub-markets where usually they escalate a lot more than other markets and then they come down more than other markets too. So the swings are more aggressive in some locations. But nobody is forecasting any kind of crash. As far as mortgage rates, the projections are somewhere in the high 5s to low 6s. Right now, you can get a mortgage rate in about 6% range. With some of our programs, we can get you rates into the 4% range, but you have to call us to be able to get those. But for the typical interest rate that's out there available to most people, it's like high 5s, low 6s, and that's probably gonna stay consistent throughout the next year. Now, that's definitely some relief from where we saw rates in the 7s not long ago. And I think when they get down to the 5s, closer to the mid 5s, is when it's going to unlock all of those sellers that we talked about had the rate lock-in effect where they don't want to give up their home because of that low interest rate. Of homeowners surveyed nationally, the magic number that says will get people to move is somewhere around the 5.5 range or just a little bit more. So what we expect is when rates hit that range, we're probably going to see a lot of homeowners that were locked into their home finally come to the market and want to sell. Now, if rates go up, that means that there's probably going to be fewer bidding wars, and inventory is going to climb and appreciation slows down. If rates come down more than expected, then what's going to happen is there's probably going to be more sellers that come in the market and they want to sell. So inventory might go up, and for every home that comes in the market, they're also going to want to buy. So it's likely that inventory will go down when rates come down, even though those sellers will be unlocked from their home. What'll happen is we'll see multiple bidding wars, likely a lot more appreciation, and less choices for buyers in general. So sometime in 2026, we're leaning towards getting towards a buyer's market. That could continue to happen, or it could fluctuate and swing back into a seller's market. It just depends on where rates go. But all experts agree that rates are not going to crash. We're seeing little micro adjustments, and they're still trying to curb and keep inflation in check. So they're just making micro adjustments and seeing how the market reacts to it. If the market starts to take off too much, they'll probably inch those rates back up again. And if the economy's not picking up enough, they'll probably creep them down a little bit too. So what does that mean for you? Well, if you're waiting for interest rates to drop, I probably wouldn't do that because we have access to rates in the 4, and you can just get that now if you'd like to. If you wait too long and wait for interest rates to drop like everybody else, once they've dropped, it's too late, and you've missed out on the fact that you can negotiate at homes, because when the rates drop too much, it's going to get back into bidding wars. And for sellers, don't let these high rates stop you from selling and losing that low rate, because we can lock you into another low rate. And that way, financially, it'll make much more sense for you to make a move. And that's what happened with David and Melissa that lived in West Ashley. They didn't want to move because they had an interest rate at 3.25. Well, when we ran the numbers, and they realized that buying that next home that they wanted was actually a lot more money. But when we ran the numbers and found out, okay, here's how much you're gonna net from your home, you've generated a ton of equity in your home, you can use that as a down payment for your next property. We showed them how we can get them a rate in the low 4s, and in addition, how much we're likely able to renegotiate off the price of their next home. So what we did is we went out there and we looked at properties and just took it slow. We realized that there were some properties out there that they would like to buy. And then we figured out how much we can negotiate off the price of those homes. Once we had that information as ammunition, we were able to show them how much they could sell their home for and how much of a down payment they could get on that new purchase. Now we ran the formula to figure out how much their payment would cost, and what they found is that their new payment on a much bigger, newer, nicer home was marginally more than their payment on their older home that wasn't enough space for them. So what they figured out is now is actually the perfect time for them to make a move. And they were able to sell for $15,000 over asking price when we hit the market, which again gave them even more financial security that now is the right time. And what they told us is they're really happy that they didn't wait till 2026 when everybody else is waiting, because they likely weren't able to hit that combination of negotiating a lot off the price of the home for their next purchase and also selling for top dollar and also securing a low interest rate. So they got the best of all the worlds. So the truth is, opportunities exist right now. It's only the ones willing to seek them out and seek the truth of the answers and cut through the noise are the ones that are willing to capitalize on it and take advantage of that opportunity and make their future better than the others. So call us today if you want to be in that group of people. You can call us at this number below, or you can visit our website at davefriedmanteam.com. Again, that's davefriedmanteam.com, davefriedmanteam.com, and meet with us so we can show you what your options look like. Thank you so much.